Hello everyone, my name is Bob and I'm the lead senior consultant for Upstack America. With me, I have Victor, who is also a senior consultant for Upstack America. And this is General Ledger, lesson 5 of our Oracle EBS Financials Functional Training. I will ask Victor to walk us through the presentation and training. Victor, please go ahead.
Thank you, Bob, for the introduction. Welcome to Lesson 5 of our Oracle Financials Functional Training. Today, we are going to look at the concepts that you can see. So, we are going to look at code combinations or account combinations as they are called. We are also going to look at the combinations table, the purpose. We are going to look at the feature of dynamic insertion, and hopefully we'll be able to look at cross-validation. Okay. So let's start with the concept of code or account combinations. So what is a code combination? A code combination can be described as a combination of segment values that constitute an account in Oracle Financials. So listed here are examples of code combinations or account combinations, as we can also call them. So the first one tells us that this account combination is a cash account for company 1, division 100, department 10, and these are the default values. The second line tells us that this is a payables account for company 2 and division 101, department 20, and the default accounts. So we use these combinations to enter journal lines in the general ledger, and we can also do account inquiries against these combinations. This is why we have a multi-segment chart of accounts. It enables us to do inquiries and entries using these code combinations. Now, why are we looking at this concept of code combinations? In order to use these combinations, they have to exist in what is called the combinations table. So in order to enter these values in a journal, they have to exist in the combinations table. So the combinations table in general ledger is what determines what is a valid or invalid account combination or code combination. Now, when I use the term valid and invalid, as we are going to see later, it's not valid or invalid as per the functionality of general ledger, but it is valid or invalid as per the business rules or the business organization of the enterprise that we are implementing general ledger for. So at this point, I would like to show you the combinations table on our Oracle instance. So let's go to, so I'm logged in as the user that we created for this tutorial. And in order to go to the combinations table, the navigation is setup accounts combination. So setup accounts combinations. So this is our combinations table. Now, if you do a query for everything that is contained here, which is control F11, it will show you all the account combinations that we have used since we started using our primary ledger. So you can see that these combinations are the ones that we have used in entering our journals as we were doing our tutorials, okay? And you can see they're all different. So from here, you see this is for company 1, a cash account, division 100, department 10, and defaults for all the other segments. And basically, this is the list of all the combinations that we have used. So at this point, what you should be asking is, how did this combinations, code combinations get to the combination ledger, because for sure we haven't done anything where we had to manually enter these values or these combinations. Let me call them combinations as they are supposed to be called. We have not done anything to enter these combinations manually in the combinations table. This takes us to the next concept that we are going to look at. Go back to our slides. And this is the concept of dynamic insertion. Now, we have definitely mentioned dynamic insertion in previous tutorials, if you remember correctly. And we mentioned this when we were doing the setup for our primary ledger. So the feature of dynamic insertion allows users to enter and use combinations in their general ledger work, whether it's entering journal lines automatically. So dynamic insertion feature enters the combination values automatically in the combinations table as you use them. So this process happens in the background, and it's not something that you notice, because it seems that once you just enter the combination values in the journal lines, you are just able to use it. But what actually happens is, when you enter that value, the Oracle checks whether this value already exists in the combination table. If it does not exist in the combination table and dynamic insertion feature is enabled, then Oracle will automatically put this account combination in the combinations table. Then you will be able to enter. You will be able to enter and use that combination in your journals. So I think we need to demonstrate this so that you can actually see how this feature of dynamic insertion works. So let's go back to the system. So where do we enable or disable the dynamic insertion feature? We do this at our chart of accounts structure, because this feature affects how we are able to use the different segment values to create account code combinations. So the navigation will be setup, financial, flex field, key, then segments. This is how we go to our chart of accounts. So application should be able to remember your way here. Should be general ledger, and under the accounting flex field, our structure is called Maskani. So now, as you can see down here for our chart of account structure, dynamic insertion is enabled here. Okay, so if we want to disable dynamic insertion, we have to uncheck this box here. In order to change anything here first, we need to unfreeze our flex field definition. So let's do that. And then now we can uncheck this. So dynamic insertion now is turned off or is disabled. Let's freeze our flex field structure, flex field definition again. And let's save. And okay, so click OK through those notifications. So let's go back to our combinations table. I believe we should have it somewhere here still open. Now we have turned off a dynamic insertion from now on. Looking at our combinations table, on which we have done a query for all the values contained here, we said that this these combinations that already exist in our table were put in here automatically by the dynamic insertions feature, because it was turned on from the period that we started implementing our ledger. So now that we have turned off the dynamic insertions feature, what should we expect if we try to use a combination that does not exist here in entering a journal?
And I wanted to make a clarification on that. Now, when Victor says that they were put in there when the dynamic insertion was on, it means, like, for example, the invoices, the journals that we entered up to this point when we were doing this demonstration, those journals, we were entering those journals using these combinations, okay? And that's why they ended up in this combinations table, because the dynamic insertion was on.
Yes, exactly. So now that we have turned off the feature of dynamic insertion, what should we expect from this point onward when we try to use a combination that does not exist here? So there's only one way to find out, and let's check for a combination that we have not used. So we have for sure not used company 2. So I think that will be the easiest way to check how dynamic insertion works. So let's close this. Let's go back to our navigator. And let's enter a journal in our ledger. Try to enter a journal in our ledger using a combination that has company 2. So we can call the journal combinations test or dynamic insertions test. Don't have to put in the description, but let's make a habit of doing it. So in our first line, we are going to do company 02 property managers. We are going to do, let's do a favorite account, cash. Let's do what division? Let's do a favorite division also, industrial. Let's do default for all the others. This is the error message that turns up. Please choose an existing combination. You can also click on this details button. The message remains the same anyway. There's no more information. So what is this demonstrating? One, this demonstrates how the combinations table works. For anything, for you to be able to use any combination in your journal entry, that combination has to be existing in the combinations table. This combination that we're trying to use here for Mascani property managers does not exist in the combinations table. Why? Because we have turned off dynamic insertion feature, which was doing that insertion for us in the combinations table before. But now, since it has been turned off, the combinations are not being automatically added to the combinations table before we can use them in our journals. To demonstrate this further, so we can clear this. Yes. Close. Let's go back to the combinations table. So setup, accounts, combinations. Let's do a query for all the combinations that exist. So let's pick a combination that is already here. Okay. So let's try and use the first one. I think it's going to be easy. Company 1, cash account, division 100, department 10. Okay. So let's go back and try to enter a journal using that combination. So new journal. You can call this combinations test again. So if I remember correctly, it was company 1, the cash account, the division was 100, industrial plants, the department was 10, and I believe everything else was short. Click OK. See, we don't get the error message. Why? Because this combination exists in the combination table, and that combination table is what determines what are valid or invalid accounts. All right, now we have seen how dynamic insertion works and how the combinations table is the one that determines what combinations we can use. So what is the next thing that we should ask? If dynamic insertion is on, then we can be able to enter any combination that we want, because dynamic insertion will just allow any combination if it is on. But if it is off, we cannot do that. So the purpose of dynamic insertion comes from our ability to turn it on and off. So when it is off, what can you do in order to use an account combination that does not exist in the combinations table? You have to manually enter this combination in your combinations table. Manually enter and make sure that it is enabled. So if we can close this and go back to our combinations table. So setup, bring this up here. So it's setup, accounts, combinations. So query for everything. All right. So in order to use a combination that does not exist here, and dynamic insertion, which was adding these combinations here for us automatically, has been turned off, we need to come in here and manually enter a combination. All right. So if I click there, I can enter a combination that I want to use that does not exist here. So why would a company or an enterprise want to turn off dynamic insertion? The reason is that could be because the company organization or the business rules of the company do not allow a certain combination to be used. So let's take an example of our enterprise, Maskani. We have two companies, Maskani Developers and Maskani Property Managers. Maskani Developers, we know they are involved in construction and development of properties, commercial and residential. Property managers, we know they're in the business of managing properties for other entities. So, for example, we wouldn't expect the property management company to. It would be reasonable, not so. Excuse me, to expect them to own any development land, because they're not involved in the business of construction. However, these companies, they share the same chart of accounts. So if dynamic insertion is on, any user can go and create an account combination using Maskani property management, and let's say an asset account that is for development land. But we know that property management company is not supposed to own any land assets because it's not involved in the business of construction. So in a scenario like that, you can see why a company or an enterprise would want dynamic insertion to be turned off, so that the values which are contained in the combinations which are contained in the combinations tables are only the ones which are valid in regards to the business rules or the business logic. All right. So that is why an enterprise would want to turn off dynamic insertion. Now, as we proceed, we'll see that just turning off dynamic insertion can be a very difficult way of meeting these business rules. So, for example, if there is a range, you have very many possible combinations depending, on the number of segments and the number of values contained in each value set. So, like for our company segment, we have 2. Our natural account segment, we might have, like 15. We have 4 for our division segment. So we have a very large list of possible combinations. So in order to just invalidate a few and be able to use the remaining valid ones, we have to enter all the valid combinations in the combination table and leave out the ones that are invalid. And that is a very tiresome and time-consuming way of managing your combinations when dynamic insertions is off. So one way that you can use the on and off, just turning dynamic insertions off feature and managing your combinations, is first allowing dynamic insertions to be on for a while, and then after all the combinations have been entered automatically by dynamic insertions in the combinations table, then you can come and disable the combinations that do not meet your business rules or your business logic. So you can see this button right here that says enable. If I uncheck this, it means I cannot use this particular account combination. So cash account for company 1, division 100, department 10. I cannot use this particular combination. So you can allow dynamic insertions for a while, allow for all the possible combinations that are valid for your company to be entered in the combinations table, and then you go and disable the ones that are invalid by unchecking this button against them. Okay, so I hope that's clear. So let's go back to our slides. So we have said dynamic insertion creates combinations as you use them, and they are stored in the combinations table. And when dynamic insertion is off, the valid combinations have to be entered manually, and the invalid ones are left out. And we have given a reason as to why you don't want to turn off dynamic insertions. It's because some of the combinations that might be entered when dynamic insertions is on do not meet the enterprise rules or the business logic. Okay, let's move on. Okay, this is also a summary in like table form. So when dynamic insertion is on, combinations are created automatically in the combinations table. And when dynamic insertion is off, combinations that need to be used have to be entered and enabled in the combinations table. Okay, now I want to clarify two concepts or two ideas. So we have said that what is an account combination? It is like the combinations of the various segment values. So like 001 plus then the value for the cash account, or and then the value for the division department, like that. That's an account combination. In Oracle parlance, like in Oracle speak, that is usually called an account. That account combination is called an account. However, for accountants, like who are not, the IT consultants like you are training to be, an account is most of the time the natural account value itself. So an account can be the cash account, the 001,000, or the payables account, the 00200. So in Oracle, you can disable both the account combination, and you can also disable the natural account itself. So we have already seen how we can disable a combination by going to the combinations table and unchecking that that value, that enabled checkbox against the particular combinations. But how can you disable the actual natural account? So let's go to Oracle and take a look. So in order to do this, you have to go to the value set. So the navigation will be set up, financials, flex fields, key values. And let's go to our natural account value set, which goes by the name of Maskani group account. Fine. So these are the values in our value sets. By the way, I have added some values in this value set, which we are going to talk about. They're going to help us when we are doing cross validation rules. But anyway, I have added some new values. So let's say we want to disable the cash account so that it cannot be used by any company at all, regardless of the combination. What would we do? We would come here and uncheck this. So if we uncheck this button and save, what that means is that this natural account value, the 001,000, cannot be used at all, regardless of the combination, whether it's with company 1 or company 2. So let's go and test this theory by trying to enter a journal. So new journal, account test. Line 10. Click on this. Let's do company 1. Look at this. This cash account does not even exist in the list that is available for us under the natural account segment. So you cannot use it regardless of the company you select. We can even try to use the other company that we have, Maskani, property managers. Okay, let's go to account, select the list, still doesn't exist. Okay, so that is the difference between disabling the natural account itself and disabling a combination. So close this. We have don't need to post. Yeah. So by going back to our combinations table, if we disable this, we are only disabling this particular combination, the way it exists like this in the combinations table. So we are disabling users from using company 01, cash account, division 100, department 10, 0000000. But if a user wants to come and do company 01, cash account, division 101, department 10, 0000, they can do it because that's a different combination. That's a different account combination. So that's the difference between disabling the natural account and the account combination. So why would a company disable the whole natural account? Maybe they are not engaged anymore in the business that account represents. And by the way, you cannot just the disabling is not just for natural account values. You can disable even for your company or for your department. Maybe a department has been folded. You don't have a sales and marketing department anymore. You can disable that if you don't want it to be used in future entries. You can also, if you have closed one company, if you close Maskani Property Managers, you can disable the value for 002 for Maskani Property Managers so that it cannot be used. So that is why we would disable a whole value from being used. That is the difference between disabling account combination and disabling a whole value in Oracle. Okay. So let's go back to our slides and take a look at account combinations also have properties, and let me see. Go back again to our combinations table. What do I mean when I say combinations? They have properties. These are the properties that I am talking about. You can look at here. We have a type, and when you look at the end here, we also have allow budgeting and allow posting boxes checked. So where do these properties come from? These properties are inherited from the values level. You remember when we were entering values in our value sets, there are some qualifiers that we specified. There are some segment qualifiers that we specified for our values. So let's go back there and take a look. Close that. Go back to our navigator. Nice. So setup, financials, text field key, and let's go to values. Let's do the natural account. Value set goes by Maskani tab. So remember when we were entering values in here, we had to select some qualifiers. So allow budgeting, allow posting, account type. These properties or qualifiers are the same ones that are inherited by the account combinations that you saw in the combinations table. So account type is specific to the natural account values. So any combination that uses any of the values in here will inherit that account type of that particular value. So if it's a cash account, if it's a combination that uses the natural account for cash, it will be an asset. If it uses the natural account for expenses, it's going to be the combination is going to inherit that property also. It's going to be an expense. These two others, the allow budgeting and allow posting, are also inherited from here. So if, for example, you use, let me first close this. Value set. Let's look for the company value set. We have only two values, and we also have two qualifiers. So these two qualifiers, they allow budgeting and allow posting. They cut across all the value sets, but the account type is only for the natural account. So for example, if we did allow budgeting no for Mascani developers, any combination that uses the Mascani developers value will not have the allow budgeting box ticked. So regardless of what the other segment values are in the combination, because this particular value we have selected no for the allow budgeting, then it's not, that combination is going to inherit that particular property of qualifier. Okay. All right. So let's close that and go back to our combinations table. Set up accounts combinations, do the whole query. Now, what the few concepts that I want to demonstrate here, or to clarify here, is one, changing these qualifiers at the value set level does not affect the combinations that already exist in the combinations table. What do I mean? For example, if I go to my value set and I change my cash account to from an asset account to an expense account, which doesn't make sense, but you can still do it, then it doesn't mean that this combination here, the first one, will also change into an expense account. What will happen is any future combinations that will be entered using the cash natural account, the 001,000, will take on the expense account type. All right. If I go and change, this is a revenue account type. If I go and change this 004,000 from a revenue account type to an asset, this combination here won't change from a revenue to an asset. However, if I use another combination using this natural account, any other combination that I use after that will take on the new account type. So I think it's easier to see this by using a demonstration. So let's go back to value sets, setup, financials, flex field, key. Let's do values, value set, maskani. Let me enable this again, actually, and let's click on this second tab over here. Let's change cash from an asset to an expense. So Oracle allows us to do that, even though I mean it doesn't make sense, maybe in an accounting sense. Let's save our work. Let's close this. Let's go and enter a journal using the cash account. So just do combinations test again. Combinations test. First line. So let's do company 001. Let's use hash. Let's use division. Let's use single family homes 102. Let's do default for everything else. Okay. So actually, we didn't. Let me go and turn on dynamic insertions first, because I am not sure what combinations exist. So let's close that. Close that. No. Let's go to segments. Scanning. All right. Let's unfreeze our flex field definition. Let's allow that and freeze again. Okay. Let's save our work. Let's close this and go back and now try to enter a journal. Combinations test. I won't enter the description. All right, so we changed our cash account from an asset to an expense. Then division, let's do 102 and default for everything else. Okay, so 1020. Let's do company one. Let's say we sold. Okay, home sales. That's one of the accounts that I added. Division, same division. 00, 00, 00. Okay. Now, actually, there's something that I want to demonstrate. I'm not sure. I think we had not used this combination before. So I'm not even going to post this journal. I'm just going to save it. Oh, did I not enter? see, I did not enter that. Now let's save it. That has been saved, and we can close this. Now we can go to our combinations table. Had we already used the, I think we had already used the 102. Okay, that's the problem. All right, so that was a bad example because we had already used this. This already existed in the combinations table, the journal in the line that we entered in our journal, and it was already an asset, so it doesn't change. And I think that's a good example also. It doesn't change. The combination account type does not change if it had already existed in the combination table. So I guess we're going to enter another journal line using cash account, and we'll change this to 103. And also this did not exist before, but you see it has been added even without posting. So Oracle checked the combinations table and saw that this particular combination does not exist. And then it added it to the combinations table through dynamic insertion, which we just turned on before we entered the journal. And then it added it. That's why we didn't get an error when we use this line. So let's go back and use cash account with division 103. So let's enter another journal. Combinations test 2. So we'll do company 001, cash, division 103. I believe we have 103. Yes, apartment, department 00. Second journal line should be 001. To use the correct count. So apartments should also be under home sales. Division 103. So let's do a debit of 1,000 and a credit of 1,000. Let's save our journal. Let's close this, close that. Go back to our combinations table, and hopefully we will have okay. So as we were saying, the properties are inherited from the value set level, from the values level, and are inherited by the combinations. And we had already said that when you change the properties of the values, it does not affect the previous combinations that had used that particular value, but it affects all the subsequent combinations which are going to utilize that value. Now we had entered a journal using, after we changed the cash account from an asset account to an expense account. We had entered a journal. We used a combination that did not exist before, which was this one, 001 with the cash account and division 103, but it still came out as asset, and we were expecting it to come out as an expense account. So why did that happen? It's because when you effect these changes, you have to log out first. What we can say is that the changes, it's like they don't take effect dynamically. So you have first to log out and log in again so that the changes can be effected. And I tried and tested with another combination that did not exist. I had to use a department value because I had used all the other combinations 100, 101, 102, and 103, and all those combinations were taking the asset had the asset type account. So I used this in the journal. So 001 with the cash account, division 103, but with a department value of 30, which I think is our sales and marketing department. And you can see this combination took the expense account. And this effect came up after I had logged out and logged in again so that my changes were effected. Okay, so I think we can go back and change back our cash account to an asset because we have demonstrated what I wanted to demonstrate to you. Value set. Go back here and change this to an asset account. So that combination that we entered, which had cash as an expense account, it will remain there in the combinations table, but all future combinations that do not exist, that are going to be entered, that do not currently exist, but are going to be entered in the combinations table, are going to take this asset type. So let's save. All right, so let's go back to our slides and see where we are now. So we have seen how the properties of the values in the value set are inherited by combinations. And these are the particular values that we talked about. They allow budgeting, allow posting, and account type. All right, so this here is a build-up to cross-validation rules, which I think we will look at in our next lesson. But let's lay a foundation for cross-validation rules. We have already seen how the functionality of Oracle is affected by turning on and turning off dynamic insertion. When dynamic insertion is on, any combination goes, right? Because dynamic insertion just inserts these combinations in the combinations table as you use them in your journals. Now, we have already said that every combination in the combinations table is a valid value if it is enabled. The valid combination if it is enabled. But we have also seen that sometimes business logic or business rules dictate that some account combinations cannot be used because that is not how the business is set up. If a one company is not allowed to use, the land asset and the land natural account because it's not, it doesn't own, then if a user enters a combination with that company and the land account, that's an error, that's a mistake. It's not supposed to happen. And so how can we prevent this? By disabling dynamic insertion and putting in manually only the valid values. So the values that are in the combinations table are the valid ones, and the ones that are not there or have been disabled are the invalid ones. But we have also seen that this can be very time consuming and it's a lot of work if you have very many valid combinations that you have to manually enter in your combinations table. So the concept of cross-validation rules helps us to overcome this problem, the limitations of dynamic insertion. So what cross-validation rules do they act as a filter around the combination table, right? So we have said the combination table is where the valid accounts exist. And those are the accounts that you can use. So when you have cross-validation rules, according to those rules, you define which account combinations are valid. So which account combinations will be allowed to enter into the combinations table. Okay. So valid combinations are allowed into the table by the combinations rule, while the invalid ones are rejected. So when you try to enter a combination that is invalid as per the cross-validation rules, it is rejected. You cannot enter it in the combinations table. The other thing that you need to know about cross-validation rules is that it does not affect combinations that are already inside, right? So if these rules, they act as a filter around the combinations table, from preventing invalid combinations from getting into the combinations table. But if the combination already exists in the combination table, then there's nothing that the cross-validations rules can do. So what you do to those values that are invalid but already exist in the combinations table is you disable them. And I showed you using that button on the left that says enable. You can check that. The other thing you need to know about cross-validation rules is that they are entered as inclusion and exclusion ranges or domains. And I think this will be better understood once we start actually seeing examples of cross-validation rules and implementing them in our primary ledger. But as a simple explanation is, first you define a whole bunch of ranges that are, the inclusion range shows all accounts that are possible in your ledger, like all possible combinations. And then you enter an exclusion range, which shows the particular values that you want to reject, the invalid ones. And so what Oracle will do, it will read the first inclusion range, and then it will read the exclusion range, which shows the values which are not allowed into the combinations table. So if you try to enter any of those combinations that are in the exclusion range, you will get an error. You will be told that this is not a valid combination. And so cross-validation rules, what they do is they enable us to have dynamic insertion on, which dynamic insertion, as we have said, it allows any combination to enter into the table. But at the same time, we can still reject invalid combinations that do not meet the business logic. So that is a primer on cross-validation rules, but we will go into this topic in depth in our next lesson. So Bob, unless you have something to add, I think we can end our lesson today there.
I think we're good. Thank you so much, Victor.
Thank you.